Hello, I'm Liam Kennedy, and welcome to the first ever European Retirement Week, which is taking place this week online due to COVID-19, and it's at the initiative of 11 European associations, and they include Age Platform Europe, Better Finance, BEUC, the European Consumer Association, the Cross-Border Benefits Alliance Europe, CBBA Europe, the ETS Project Consortium, the European Association of Paritarian Institutions, AEIP, the European Banking Federation, EBF, IFAMA, the European Federation of Securities Exchanges, FESE, Insurance Europe, and Pensions Europe. The purpose is to create a platform for a wide range of stakeholders to debate the future of pensions in Europe and to raise citizens' awareness of the need to save for retirement. This has translated into a week of panel discussions, workshops, and presentations. It's the first time that such a broad group of pension-focused stakeholders has joined forces at EU level. While the participating stakeholders may have broadly different views on a number of pension policy priorities, they all agree on the urgency of the pension challenge and on the need to find solutions. Indeed, European countries are aging fast, and rates of poverty and social exclusion among pensioners are rising, particularly in the wake of the COVID-19 pandemic and for certain categories of workers. And at the same time, pension systems are facing increasing budgetary constraints. So solutions must be found to ensure that all European citizens benefit from an adequate pension in retirement. So against this backdrop, we asked some of the stakeholders what, in their view, should be the key policy priority for pensions for the next 5 years.
What should be the key policy priority for pensions for the next 3 to 5 years?
If you really want to empower citizens and to deliver for pensions with good returns, you need to address cost and transparency. Cost translates into giving citizens access to cheap products, especially that they're able to make direct investments into shares, bonds, and ETFs. Transparency translates into finally making European market structure transparent, fair, and accessible. Today, more than half of equity trading and the predominant share of bond trading happens in the dark. If we really want to help European pensioners, bring light into the dark as a policy priority.
For older people, the main priority is to have adequate pensions today and in the future. However, poverty and social exclusion are increasing among older people, in particular among older women. Pensions from second and third pillar are not able to improve minimum old age income for people with career breaks, but also those with atypical work contracts or for the self-employed. As the green transition is a priority for all of us, we must ensure that pension savings also contribute to this sustainable future for all generations. And that's why we must ensure that savings will be part of the green solution, not part of the problem.
We think the priority should be first, that we make sure that our pension systems are financially sustainable, but at the same time just across generations. Second, we will need to increase employment participation of all the workers and women in order to make sure we have enough contributions in the system. Third, everybody should have access to pension as long as the persons in question have contributed to pension systems while working or while running a business. And fourth, we need interaction between the three pillars: the public pension, the occupational pension, the private pension, and involve social partners where appropriate.
For us, the key priority is to raise awareness of the increasing retirement savings gap in many of our countries and the absolute necessity for citizens to save, to feel financially secure in retirement. To get there, we need more financial education, the right policies and products, and appropriate tax incentives for long-term investments. The longer we wait to do all of this, the more social damages will be created further down the line.
So we now move to our keynote presentation from Commissioner Mairead McGuinness for financial stability, financial services, financial stability, and the Capital Markets Union. And she will be giving an overview of some of the initiatives at EU level.
Good afternoon, ladies and gentlemen. Delighted to be kicking off the first European Retirement Week. It's a very timely initiative. The population in Europe is getting older. We're living longer and we're staying healthier for longer, which is both welcome and remarkable. Projections suggest there will be nearly 500,000 people aged 100 or older in the European Union by 2050. At the same time, the overall fertility rate in the European Union remains relatively low. This demographic shift has implications on individuals, governments, business and civil society. It provides opportunities, such as the so-called silver economy, where older people with wealth and some free time spend money earned over a lifetime's hard work. But of course there are challenges as well. There will be more people needing health and social care. So we need systems that are up to the challenge. The shrinking work-age population will affect labour markets, economic growth, social security systems and the sustainability of public finances. And we need to understand what an ageing population means for our financial system. So let me start by talking briefly about pensions and why they are important. Pensions are there to allow retired people to enjoy decent living standards after a long life of work. But not every older person in Europe has or will have enough resources to live in dignity, even though this is a core part of the European Pillar of Social Rights. The Commission's 2021 report on pension adequacy clearly shows that poverty in old age has increased. It now stands at a new average of 18.5%. Just over 16 million older people are still at risk of poverty or social exclusion in the European Union in 2019. Of course, pension policy is decided at member state level by each EU government, and there's no size-fits-all approach. But European coordination can help all EU countries to deliver pensions at a sufficient level in a way that is sustainable. And an important step in ensuring European citizens have enough income in their retirement is to complement good state pension systems with high-quality, safe and cost-effective supplementary pensions. As the European Commissioner for Financial Services, I'm committing to building a truly single market for capital across the European Union, the Capital Markets Union. Developed capital markets can support pension systems and contribute to long-term social goals like increased pension adequacy. If they're designed in an inclusive way, they could help meet the needs of our ageing population. The CMU can help Europeans invest and save for their long-term futures. The more developed capital markets are, the easier it will be for citizens across the EU to access financial products that match their needs and preferences. So when the Commission presented a new Capital Markets Union action plan last year, we made sure to include retirement saving as an action point. Our goal here is to foster transparency and support good practices. We've just published a study analysing existing auto-enrolment practices in a number of EU and non-EU countries and proposing best practices for such systems. I hope the findings of this study will inform ongoing discussions on pension reforms in several member states. We also want to identify best practices in setting up national tracking systems for individual pension rights. And we want to explore the possibility of a pension dashboard to get a better view of the sustainability and adequacy of national pension systems. So last year we asked EIOPA for technical advice on these two measures, and we expect their recommendations soon. Well-developed capital markets also require institutional investors who can invest with a long-term perspective. The Commission wants to encourage investment in the European Union and support the flow of capital towards infrastructure and long-term sustainable projects. But often large institutional investors, for example insurance companies, are reluctant to invest in infrastructure because prudential requirements mean they must hold a high level of capital against those investments. So in September, we adopted the Commission's review of the Solvency II framework. This review will release up to €30 billion of capital, fostering the insurance sector's investment capacity. And we're doing so not as a gift to the industry, but to allow insurers boost sustainable investment with a long-term view. and it will help deepen the capital markets union. Like the insurance sector, pension funds hold assets worth trillions of euros and play an important role in capital markets. You will know that the prudential rules for the pension sector are set out in the Institutions for Occupational Retirement Provision 2 directive. This directive has improved the rules on governance, information provision and cross-border business, benefiting both providers and beneficiaries. And it was one of the first pieces of EU financial services legislation referring to environmental, social and governance risks. While we still need to see how these rules work in practice, we will consider the need for further steps as we prepare the next review of the directive. In particular, the Commission will assess whether the fiduciary duties and stewardship rules of pension funds should be clarified to increase their contribution to our European Green Deal targets. Occupational retirement provision has proved to be a well-established and highly successful tool in many European countries. It can reduce the burden on national pension systems and ultimately provide large groups of employees with a safer and higher pension income. To complement what's happening at national level, the Commission wants to ensure citizens also have a pan-European option to save for retirement. The Pan-European Personal Pension Product is a voluntary personal pension scheme designed to give savers more choice, provide them with competitive products and maintain strong consumer protection. Insurance companies, asset managers, banks, certain investment firms and certain occupational pension funds could offer this to their clients. The Pan-European Personal Pension Regulation goes live in March of next year. Under last year's CMU Action Plan, the Commission committed to increasing support for investment vehicles that channel financing to long-term investment projects. This month, we proposed an amendment to the European Long-Term Investment Funds Regulation. One of the key aspects of the reform is to give retail investors greater access to LTIF investments, allowing them to meet their long-term investment and saving needs while ensuring a high level of investor protection. The proposed rules will expand the range of assets eligible for LTIF investment in areas like transport, social infrastructure and clean energy. It will also provide extra flexibility for LTIF managers to set up, operate and market LTIFs. And this will give investors more long-term investment opportunities. A lot of the developments I've discussed today create new opportunities for EU citizens as they plan their futures, but they also put more responsibility on their shoulders. So it is vital that individuals have the knowledge and skills to make good financial decisions. But the reality is that many do not understand basic financial concepts like interest, inflation and the relationship between risk and return. In the European Union, levels of financial literacy are uneven across member states, and the most vulnerable groups are disproportionately affected by the lack of knowledge around finance. The Commission and the OECD are working together on a competence framework for financial education. It's about creating standards that are commonly used and recognised across the EU. It will outline the knowledge, skills and attitudes that they will need to secure their financial well-being throughout their life. We're currently working on the framework for adults, and next year we'll prepare one for younger people. As our population gets older, we need to make sure they have options when it comes to saving for retirement. European Retirement Week is a unique opportunity to come together, to think about what is working in Europe and where we can do better. The Commission is working on measures that can help national governments deliver good and sustainable pension systems. And we're developing the Capital Markets Union, which can help meet the needs of an ageing population. Thank you for your attention.
And thank you very much, Commissioner McGuinness, for your keynote speech, which covered some very interesting and important the Capital Markets Union, as well as policies like IOP2, and of course the role of long-term investment and consumer education, which is increasingly important as we move to defined contribution pension systems. So now we go back to our stakeholders, and here's how the stakeholders believe better pension outcomes can be delivered to European citizens.
What will be your number one recommendation to deliver better pension outcomes for European citizens?
A long-term approach is necessary to ensure pensions for each.
What will be your number one recommendation to deliver better pension outcomes for European citizens?
A long-term approach is necessary to ensure pensions for each generation. In many European countries, unions are closely involved in the decision-making process relating to pensions. Indeed, representatives of employers and employees are best suited to address the challenges of pension. Solidarity among different professions and different generations. I would say also sustainable and responsible investment in our funds to accompany the transition underway. The top priorities today are to maintain adequate pensions and to instill confidence in the pension system.
Saving for your pension is one of the most important financial decisions that consumers need to take. That's why they need expert financial advice. Too often, though, financial advisors recommend the wrong product to consumers. That is because they often get commissions or kickbacks for selling certain products, whether they are or not in the consumer's interest. And that gives rise to a lot of mis-selling scandals. We launched a campaign called The Price of Bad Advice, where we ask for a ban on such kickbacks or commissions. Such bans already exist in the UK and in the Netherlands, and they work. There, consumers know that the financial advice they get is fair and impartial. Now we need an EU-wide ban.
A key priority is to develop simpler, more cost-efficient and comparable pension products. Therefore, all stakeholders, the European authorities, the Member States and the industry should give a fair chance to the PEP, the first pan-European personal pension product to be launched next year. The PEP default option with an annual charge cap of 1% could help a lot pension adequacy and pension savers to get value for their lifetime money savings.
Speakers include representatives from the EU institutions, from IOPA, the OECD, and representatives from institutions and associations at national level. All of the sessions have one thing in common. They're pinpointing challenges and exploring solutions. Conversations don't take place in isolation, and exchanges will take place directly between the associations as well. So now we return to our stakeholders for one final question. What is the one trend that's most likely to change the pensions landscape?
What is the one trend that is most likely to change the pensions landscape?
Individualization. You will be more responsible for your own pension than before.
What is the one trend that is most likely to change the pensions landscape?
Individualization. You will be more responsible for your own pension than before. Pensions come with many questions. How much and how long you need to save? How do you invest? How are pensions paid? You may have to answer these and many more questions by yourself in the future. People need to be aware of these issues and the risks included. They need to understand them and also manage them. This isn't easy, as these are very difficult questions. People will need help, and we need to design pension systems, provide information and communicate in such a way that people will also in the future have good pensions.
The trend is quite clear, in my opinion, because we saw that in the last 2 years of the pandemic, telework took off everywhere. Probably this trend will not finish after the crisis, the pandemic crisis, which means that several workers, maybe millions of workers, will be able to work from cities or countries that are not those where their employer is based. We know that pension systems are conceived and designed at the national level. Probably for the next future, the European Union should think about international arrangements for pensions and cross-border pensions.
One of the most important trends that I hope will change is financial literacy when thinking about one's retirement. That is also the theme of our joint event with Insurance Europe and Better Finance. There is a large gap between some groups in society when thinking about and saving for retirement, and we need to close that gap. Not only for youngsters in school, we also need to close that gap For adults and vulnerable groups in society, everybody needs to have the right skills and the right tools to deal with one's finance. So that is the theme of our event on the 2nd December and also the larger theme of the European Money Week in 2022.
For me, the trend that is going to change the pension landscape is really digitalization. That can be the game changer. But of course, that can only happen if we change the regulatory framework, which is currently still paper by default. Now, we know really from the people who are concerned by it, because in Insurance Europe's second pan-European pension survey, this was the overwhelming response we received, that digitalization can really make a difference. So the challenge for the future is make digital happen and still cater for those who need paper.
Thank you to all of the participating stakeholders for your views and for that very interesting look ahead to the policy future and the policy challenges that await us in the 2020s. Don't forget to register for the events that you'd like to follow this week. And the participating stakeholders are certainly looking forward to fruitful discussions and are hoping that this inaugural edition of the European Retirement Week will be the start of a well-known and recurring event in the European calendar. So all that remains for me is to hope that you enjoy the sessions, and I look forward to participating myself. Thank you.